Okay, here goes. Good afternoon. This is Julie. It's Sunday, January 6th. I'm going to give you a little bit of my perspective, see if I can make a cogent argument for you of why I think we're getting a little bit above our skis, expecting a meltdown in the markets because we're anywhere near that at all, in my opinion. Nowhere even close. So let's see what we've got going on. A couple of things. The Fed, of course, the concern from October through today of their reducing their balance sheet at the same time they were hiking rates on an automatic pilot that got walked back. And Apple, everybody's up in arms about these expensive phones being sold and the world not being able to keep up with that because of the number of cheap phones that are in the market. And they've got a point. I mean, I agree with that. But I want to just share with you a couple of things. Like I said, this is like perspective. For the fourth quarter, just this last numbers that came out, all-time high sales. I mean, record-setting all-time high sales. And they're moving into new areas, services, which is, again, exceeding prior records, all-time highs in these new market areas that they're going into. So they're going to sell you storage space for all the crap that you didn't want to delete from your phone, so now you're paying to store it. So if you take a look at these numbers, an estimate for first quarter 2019, upwards to 93 billion of revenue, that puts them on the scale of a G20 nation, people. At the bottom of the scale, but on the scale, they would knock off Singapore and South Africa from the G20 in those numbers. If you look at their GDP, Apple is more than that. And they sell phones, and this is like a G20 country. So like I said, we need to back up a little bit and look at these in perspective. Same thing for South Africa and Argentina. You just, take a look at the numbers and you realize that Apple's sales exceed that number. And it does lend some perspective to this. Y'all should go check out the Trading Economics website and get some more information regarding where countries stand and what their data is. All of the economic indicators you can get here from the reports, boil it down, take a look inside the numbers. It's just a fantastic website. Okay. But as far as, perspective of the market, I don't think there's anything to flip out over first quarter. What you should be flipping out over is the rate of change that the Fed's central balance sheet has been taking off compared to the rest of them. So the red line is our Fed, and you can see that it flatlined between 2014 and 2017. And when Powell got in office, he started selling assets from that balance sheet. And while the Bank of Japan continues buying and the ECB continues buying, and they've not really are buying anymore. They just stopped buying, but they're like at zero. They're not changing. They flatlined, so they're just not buying, but they're not selling. They're just holding balance sheets. And while we were on a really much steeper curve path to the downside, and that absolutely had the market, looking at that dichotomy between the two. So they need to move in tandem together directionally. So we need to start flatlining until they can come up with a plan so that they all three can go in the same direction at the same time. That will be very important for the markets. So, especially in light of the fact that, total assets are so high that they would never be able to pay them back ever, like the Bank of Japan. It's right here is the chart for that. The Bank of Japan is over 100% of its nominal GDP of what they owe in debt. So there's just no way that they're going to pay that back. We're way down here at 20%. Way down here. In the Bank of England, or excuse me, the European Bank, closer to 40%. But go over to yardini.com and also take a look at these charts. They will give you some very good insight to what we can expect. And I'm thinking more of a flat curve so that we can all move in tandem, get closer in line instead of that real steep curve starting taking off. That's what the markets were panicking over. When they reduce that liquidity, you're asking the markets to carry a much bigger load than they should have been able to otherwise. And we even had some fantastic data. It would not matter, as we've saw from October. So going into this week for data, there is a Russia holiday on Monday, but it looks like China's going to be open. Retail sales, Europe, factory orders, and ISM non-manufacturing PMI. So our technology sector will be on display Monday. So if we get a good number in technology on the ISM, that would offset the manufacturing PMI, the bad number that we got Friday, which should set an overall bearish tone to the market, by the way, for the month, in my opinion. But again, jolts on Tuesday, so we have to keep our eye opening for that. Great jobs number. Wednesday, more FOMC guys talking. Interest rate decision, Bank of Canada, Carney's talking again, crude oil inventories, Bank of Canada, FOMC minutes come out, and new home sales, Powell speaks, and then Friday, let's see, core CPI. So Friday will be the big trade day for next week. Getting that CPI number as well as jolts, and on Tuesday, and the ISM manufacturing on Monday. So keep an eye out for that ISM manufacturing report. And as you can see, we ended up on Friday off of that non-farm payrolls number in the equities. This is a 60-minute chart, and I want to show you the new Bollinger Bands that I'm going to be showing on the momentum down here on the bottom. And what you should be paying attention to on this is anytime you see a divergence like this, the momentum went outside the Bollinger Band. And when it comes back for a inflection down after that, that would be a second entry to the downside. If it goes back above the mid band, though, that shows that reversal to the mean, and there's your mean. That's the linear regression 1. So right here you see that cross right here, that cross. Oops, can't draw. And then there's that beeline to the mothership. And there's your down path, second signal here. So that next crossover back below, there was a failed crossover here, it went back up. So that next crossover of the midband signals that down move right here. There's another signal and another signal. And then, of course, when it reverses back up, that's when you look for that reversal back to the midband. And this one went all the way up to the top and then came back in. So just trade that on the 60-minute. You want to be absolutely looking to see where your heads are printing to that line. Makes it very easy to know whether you're going long or short on your lower time frame. And so here's your lower time frame, the 15-minute, and you can set up those bands to either take signals off of them. Oops. When they get to the area. And again, using this theorem to avoid these bad trades, you can elect to put the BB-MOM requirement on it so that you would only get a signal when it closed above that line. So to mitigate those, and there you go, just like that. So you can set these up to trade these levels very easily. That's what I love about Bloodhound. Everything's like you can create it on the fly, basically. Choose what level, or like I said, if you want to go that inside fast, you just want to grab those, put on a template as the condition, and that way you can drop it down to your lower time frame. So looks like here we were going from 9 a.m. Oops. Wrong pane. There we go. Almost 1 o'clock, 12:30. And so you could just take that down to your lower time frame and look for entries during that time. So here is the slope. You can just, using the JATS LRT lines indicator, you can take these levels above and below, the upper 1, 2, 3, 4, the lower 1, 2, 3, 4, or the lower 1, 2, 3, upper 1, 2, 3 slope. Just take the meat, and if you get a condition for slope, maybe that would be your condition to trade it, or you can use other conditions, drop it down and use any of the other templates from the library. You know, the high-low 1 or the high-low 2. I'm using the high-low 2 to get the high-low 3, the template for the high-low 2, and flipping out the EMAs to the JATS LRT lines indicator to pick up signals using the 54321 and using it with slope, and or figuring out when that window of time was and making sure to get in on all these outer bands. As they recrossed and back into the oops. or just, here's your trajectory. So that's your goal. That's where you're trading to. Okay, so you get the point. Reducing the risk as, often as you can, and just entering at these specific locations on the chart will increase, that edge, because we're trading the pullbacks into the value area in this direction of that slope, but entering at very controlled locations where very much you can control the same amount of risk each time, carrying that profit to stop, and you're basically trading a one-on-one to the location and getting out the trajectory. So you would use that same amount of risk from the location to the trajectory. So let's look at it. $18 points. So the risk would be 18 points down here. Oops. I always do that. So there's your risk, and there's your reward. And you can just visualize how successful this can be, especially if you decide to take more than the outer two. But start out with a test of just taking the outer ones, and then maybe increase your risk by entering on the third. And you can see that you get quite a few more signals, but you're increasing your risk exponentially. For instance, right here, let's say 10 ticks, 10 points rather. So that came right there. It was just a little bit more than 10 points. It came one-on-one almost exactly. So maybe a little bit more than one-on-one, but it also came right to the trend filter. So you know where they're going when they come back and pull into the value. They're going for this bottom trajectory line, right? So here's your top trajectory, and there's your bottom, and here's your range. And so wherever you decide to enter in that direction inside this range will determine your success or failure for a trade. But now we know where it's going, because it's going to continue in an uptrend. It's going to make a new dot or a new bar exactly on that line. I mean, 100% if it's going to continue in that trend. So that is the game, and you just enter at one of these levels or any other level that you can create or come up with. In fact, you don't even have to use the Bloodhound template per se. You can just use Blackbird and lay on some limit orders on the chart at these levels. You don't even need Blackbird. You can right click the chart and enter an order, put the hidden chart trader up so that you can buy limit, sell limit, just say buy limit something way up here, and get your level where you want it to be. So say you want to trade that level coming back in, and that would be the 13, it looks like. So you can right click on your flag, go down to attach to indicator properties, and then select that lower 5 and say OK. Oh, that was lower 4, sorry. I don't have lower 5 showing. Attach to indicator. Let me cancel order and do this again. Limit 4, sorry, my apologies. Lower 4. Sorry about that. Anyway, it will go to the lower 4 of the current bar, not that past bar. So here we are at the lower 4, and it will attach itself right there for you. So if you wanted to get in at the upper 4, just change the go back in and change it. And there's the upper 4, and you'll get in. Let me cancel that order. But very easy to get in and out of these trades, and have a target to trade to and a path, a trajectory. Also something to notice that when you get a new change in direction, the first thing that price does is come back and find your LR1. So here's the LR1. And the first thing price does is make that beeline to the LR1 every time. Every single time you get a price reversal, price wants to find that LR1. So you're not only trading up these signals, these levels, to get back to the trajectory line, you are having to watch for the line to make sure that it's not going to roll over, or whether it's going to take off and make a new trend. And so like right here, we went under the LR1 line. So now you know what happens when you're under the LR1, you expect it to roll over, right? So what you want to see happen here is not take these longs for that reason, or wait for it to cross back above the 1 and then take the longs. I think I should and so see, that's what happened here. It came back down and then crossed, and then once it crosses back, then you can take them again. Okay, so but that's really cool as far as having the bar, you know, find that line every time, and that's where it's trading to. So we know our wedges on the way we've got the bar set up. So you have to be careful expecting a rollover at those intersections, and you got the rollover here. So that can be your excellent indicator of a trend continuation pattern. So now we know what the 1, 2, 3 looks like, huh? Pretty cool. Pretty cool. All right. So here's the JATS slope, the 3 minute, which can be like a trade signal strategy. I think starting out next week, I'm going to concentrate on the fours for like a 15-minute time frame, or various time frames, and the inside fast and counter trend trades, and see what I can do. I've got a couple of strategies I want to start out with. And we'll just take it, week to week, testing these various ones, and see how they work in the market. Of course, paying attention to the economic reports as they come out, what the market sentiment currently is, and see if we can make a go at it with these indicators, the linear regression, momentum, and higher time frame trend. Y'all have a good weekend or the rest of it, and we will see you in the trade room next week. Thanks.